What's up, everybody? Episode 45 coming at you. Got a new format today. Here's what we're doing, right? Market summary, 5 minutes. Updated positions, 5 minutes. Slides, 3 minutes. Rest of the time, questions for you. Okay? So let's do it in order. Pre-market, we were all looking to enter the UVXY knowing that it would go down today because I told you on Friday I was looking for a 17% decline to $30 this week. I thought it would happen on Friday. It happened today. So we're crushing it. Next, all right, there was a market fight this morning between green and red, whether the futures, and I told you guys the U.S. leads the way, right? The Nikkei was off 4% the other day. It had its best day yesterday. So I told you, again, it would likely be a green day for the market. Now, it wasn't green overall for everybody. There were tough positions, and it's a stock pickers market. So let's talk about what we did to secure profits, okay? I mentioned SQ. Scalped it, 45%, right? It was 231. It was 230. We scalped it. We sold it 236. Boss, okay? That's perfect. It was going up. Whenever something's going up, it always makes the option that you're selling more attractive. It makes it look like gold. If you have a piece of shit, right, and it's down 30%, and then it turns green and it's going up, like AI today, right? Because that was the next one I was going to talk about. I sold 50%. I kept 50%. I told you there was demand for AI, and I would not be surprised if it goes back to 70. Again, my price target on AI is 114, probably sometime towards the end of the year. Next, let's talk about it. Let's have it up for Plug. Plug had a great day. It was up 13%. At that time, I said take profits. It was nearing $34. It was $33.88. Then it declined, and then it finished up back at $34. It's probably up at after hours. That's great. My options are September. I'm holding strong. FCX. I think I have a slide for you. FCX, I showed you guys when we take profit, how I plan it out. So I was looking to get a little over $1 for my position, where I think my average was around 66 cents, okay? So that's a 34% gain. It's about like 55%. So yeah, I got that done. Tiger also spiked. Remember yesterday it was like $22 and like 20 cents when it went down. And then at $23, I bought some more options. Well, great. I think it spiked north of 24 and change today. So Tiger, additionally strong. Now let's talk about my platform real quick, okay? For my platform members, for new people, for everybody, I charge $3.49 a week. I charge under 50 cents a day to give you market direction. I give videos and update positions. I tell you when stocks are decent and they have demand and they could potentially spike. And I've been killing it for now like 8 weeks straight. I mean, we've been around for 10 weeks. We killed it the first week and a half. We had 3 bad days, and we've killed it every day since then. So $3.49 a week, less than 50 cents. Now, why? Because my vision is that we have 100,000 members, over 100,000 traders a day, trading the right way, looking for the best entry, planning ahead with strategy, looking to secure the best buys and sales on dips, and then executing. All right. So the whole point of this is please join me on this mission because that's what we're on. It's not a mission of Mars. It's not a mission. It's a mission to disrupt the way the institutions view the retail traders rather than laughing at us at a bar after the trading day on Wall Street saying, I knew we could trick them to think it was a U-shaped recovering and then we sold off or whatever they might have in plans or have in store for that day. Let's make them pay. Let's make them fear us. All right. Let's make them fear the retail. Now, I ask you guys to pay this forward. So please share this video with somebody else that you know. Share my Twitter account with somebody else you know. Talk about it on Webull. Okay, on Webull, I have close to 13,000 followers, yet only 5,000 follow over to Twitter and 2,500 about to YouTube. Spread the word. Everything's paying it forward. So that's what I'm asking you guys. Besides for liking and subscribing, which most of you have done already, please pay it forward and share this, okay? Now, if you want to look at any of my old videos, any of my old Ask Matt, okay? Episode 3, options. Episode 17, options. Episode 37, how to average down properly with options. If you don't average down properly, you will not be a successful trader. And then episode 14, stepping out of shit when you're in a bad stock and getting into a good options position. All right, let's just go back to averaging down on options. And I'll give you one quick example before we get right into the slides, okay? So please, hang out with me. If you buy one option and it's $400, okay? And it goes down 50%, okay? Back to $2, I'm just making a real easy equation. And then you buy 2 because you double up your position. Now you're in for $800 total, and you have 3 options. So your average is like 289, 290, 286, something like that. When it spikes back to $4, okay? If you just had $400, you'd be exactly even. Break even, flat, okay? When you're in at 286 and you average down correctly, when it spikes to $4, you're out. You sold your position for a 40% gain. That's it. You're done. You're done with the trade. So when people are still holding those heavy bags in options or in stocks, you know that you're already out. If you average down the correct way, you bought 2 options, then you buy 4 when it dips 40 to 50%. When it goes back up to the initial price where you liked it, the first place, you're already out. So I did that today. I've done that a lot. I mentioned that a lot. It's all about increasing your portfolio. Small piles become big piles. So now first, I just have to get upset a little like a father would, okay? You guys made me so nervous over the weekend. I told you the UVXY was going down to $30. I called $30. I said 17% it's going down. The UVXY, it did it in 2 days. I said we have the whole week. So why am I so upset if you guys are making money? Because a lot of you broke the rules. A lot of you broke the rules and became too levered in the UVXY, which is okay, I guess, if you profit off it. So you broke the rules and then you sold with the smallest of profits. I said UVXY is going down to 30 flat. All right. I sold yesterday. I sold half my position. I got back in. I made a little money today. But the point is, I told everybody that was in these heavily levered positions, it's going down to 30 flat. And all you guys tweet all day is, I got out too soon. I didn't take enough profit. But over the weekend, you couldn't sleep. Over the weekend, you were scared. The market fell on Friday. I'm telling you, don't worry. But it's just me. I had no crystal ball. I didn't know how Monday or Tuesday was going to turn out. But I told you, the one constant is we know the UVXY is going down. So I'm upset that you guys overly levered yourself in this position and then didn't hold long enough for max profit. All right, with that said, let's get some slides on the board. I think I've got like 5 or 6 slides today. We're going to cut down on the slides, all right? I like to show that results work, but I'd rather talk about stock positions and show you how my alerts work. All right, BIIB, which is like Biogen, right? They came out with an Alzheimer's drug. 2 people from the FDA quit and said it should not have been approved. The stock was $404. I said, I'm thinking about buying puts. Some people bought puts. It went up to $410 that same day. And they said, hey, I'm down 70, 80%. And then what happens when you go out a week, not even a full week from that, we're at 381. It went to 370 today. I said it would probably go to 360 by the end of the week, and I'm probably going to be right. Next slide, please. Point is, make predictions. Oh, Wish, on Friday, if you watch my YouTube, we're episode 45, so you'd watch 43, which was on Friday. I said there's one stock I'm looking at for Monday, WISH, and that was the stock we were looking at. Now, unfortunately, I didn't get in because it's a meme stock. Did I say that right, Carlos? Meme stock. All right, what else did I learn from Carlos today? Target is pronounced Target, all right, because it's French. And then you have Dogecoin, which Carlos calls Dogecoin. I mean, how silly is that? He drives a Dodge. You should call it Dogecoin. It's French as well. All right, next slide. Wish was good. This dude made 221% off Wish. All right, UVXY, multiple positions, $10,000 profit. Now I have 30,000. So it was 20 to 30. It's a 50% gain. We can't have 100% gains every day, but we know how to play the UVXY. Next slide, please. Hot as can be outside. All right, FCX. This was my lesson, okay? I sold half of my position early, and what did I do with the other position? So I told you guys, I like this option. I'm looking for a $1.05 exit. FCX was at $36. That's my strike. So anytime it hits $37 with a couple of days left, I'm going to get a $1.05. So what happened? I got about 22 contracts that I got a $1.05 for. The other 22 contracts, I got about 85 cents for. So I sold too early, and then I got max profit. But if you plan ahead and stick to the game plan, which this is my game plan from yesterday, it comes to fruition. You get max profit. For the UVXY, when I say it's going down to 30, if you stick to the game plan, it's going down to 30, you get max profit. Next slide. It's all about sticking to the game. Oh, AI. I love AI. I've been mentioning AI for like 2 days. Kramer said AI can go down even more, that there's no demand. But I see demand, and I know when there's going to be a spike. There was a spike today. It did not even sell off after the spike. It continued out a little. So, yeah, AI is strong. The other one that I sold or scalped today, Square, strong. I got more EBON today. EBON. So people are saying, oh, I hear this dude touting EBON. Well, it went down today 30 cents or something like that. It went sub to 292. Yeah, I bought some more options when it was on the way back up. When it was at 299, I bought more options. Now it's at 308. So my options are up 8% already. I mean, I went heavy. All right, next slide. I don't think I have a slide for that. Okay, UVXY. We're not there yet, but I did say this is going. So this is what I tweeted out yesterday. I told you guys 17%. We got 10% yesterday, 7% today, down. Next slide, please. Okay, I can show you guys through transparency. XTS showing life. There was some heavy buying. Now, if you look at the 1 month chart on STX, there was heavy selling for like 13 straight days. The last 3 days were extra heavy. So I'm calling the bottom on STX. I'm calling the bottom. Someone said, hey, look at the chart. How could you tell us this is a good chart? I'm calling the bottom. That's what I do. STX, the bottom. All right, let's get to some questions. Oh, before we get to questions, which we're going to do, I got Tiger, one more thing. So Tiger, I paid $280 off my first alert. Then it went down. I paid $265 off my second alert. And then Tiger spiked today above $24. So we're profitable. We're probably only 20, 25% profitable. I'm holding for at least 100%, no doubt. All right, now let's get rid of the slides. And then I want to ask you guys again, look at the bottom of the screen, pay it forward. If you want to be part of my platform, it's $3.49 a week. So if you're just finding me because YouTube is suggesting me, and they're suggesting me to tens of thousands of people now. All right, please try the platform. I have rules, lessons, psychology of trading. It's all on the platform. Then you join private Twitter and you get updates and alerts all during the day. And we crush it. All right. Thank you so much, everybody. We're going to go on to questions. We're going to give about half an hour for stock questions. And we're going to end a little early today. We're just going to speed things up. All right. Joseph joined the lifetime membership today. So I haven't spoke to that because I think we might only have one left, maybe two left. All right. Now, the reason we're ending the lifetime membership, or at least postponing them, putting them on hold, is I'm assuming this platform is going to blow up and we're going to go from 1,000 members to 2, and from 2,000 to 4,000, and so on and so forth. Point is, my time is limited. It's Carlos and myself putting this all together. So I talk to 1 or 2 of you a day. I can't do that for the rest of my life. So at some point, we're going to hold off on lifetime memberships. And then when this explodes, if it doesn't explode in July, I'll take some more lifetimers. You guys want to talk to me for 30 minutes, get my input? Perfect. Learn some more tricks and secrets that I only share with lifetime members? Perfect. If not, just be part of the platform. We've got a great community and everybody helps each other. All right, Joseph, thank you for joining. Sorry, I get sidetracked. All right, how do I feel about Romeo for the rest of the week? I still have $8 calls. Okay, now I wish you would ask me about Sorrentino Therapeutic. Why? Because they're priced around the same thing, SRN or SRNE. It's right around the same thing. And I can tell you there today, I saw volume. I saw demand. I did not see that with Romeo. But then again, I haven't really looked at Romeo all that much. Oh, it went up 2% today. Okay. That's a good sign. 5-day looks pretty decent. Demand is there every other day, so it's going to move with the Dow. So you really need the market to be strong. So you have $8 calls. You're in for about 60 cents per contract. So you're probably up a few cents, I'm thinking, because right now Romeo is at 8.53, which implies your option would be worth 53 cents. Plus you get the time. So each day they'll give you probably like 4 or 5 cents. So you'd be at 53, 57, 61, 65. That's what I think they're going for, 65 cents. I'm going to look. Calls. Yeah, 65 cents, 60 to 65 cents. All right, yeah. So you got to watch demand. Now, here's the secret, Joseph. At 10 a.m. or even 9:50 tomorrow morning, I want you to use the 1 month chart for your stock, okay? Use the 1 month chart and look at the daily just on tomorrow. You'll see if it's green, that means inflow. If it's red, it's outflow, okay? If it's outflow, your stock's going to go down. So your stock might open up at 870, but if you see people are selling, it's telling you it's going to go down. Now, if your stock comes up at 850, but you see it's inflow, green inflow, it means people are buying. It means your stock will probably go from 850 to like 880 or 890. The point is, that is a little tip. That's a little secret. Again, for anybody else, I'm going to repeat. 9:50, 10 a.m., once the market's been open for 20 or 30 minutes, you look at the 1 month chart, and then you go all the way over to today's. So today would be what? June 22nd. So tomorrow will be June 23rd. So you look at June 23rd under the 1 month chart for any of your stocks. If you see a little speckle of green, that means it's inflow. Keep focused on that. As long as it's inflow, there's more demand for your stock. Now, if it switches, like the other day I mentioned, UVXY was inflow, and then it switched to outflow, and I said, that's why it's going down. Don't worry, we're all holding strong. We're good. And what happened? It was correct. So this is a little secret. Again, the 1 month chart, look at the daily. So yeah, I mean, your positions are right. You really, I can't predict the market, but I like your position where you're at right now. Next question, please. All right, the real question is, NASDAQ broke all-time high. Will that be a triple top support or will it dump? Okay, so let's simplify things for everybody, okay? The NASDAQ or tech's at an all-time high. The Dow is close to an all-time high. Now, remember when I spoke about stocks? When I tell you stocks reach all-time highs, within the next 4 months, they're usually 28% higher. Now, those are individual stocks. The market is the same thing. When you hit an all-time high, you might have some, consolidation, but you're going higher. And we've been doing that every other day. Every time it consolidates, it pumps up a little higher. So the point is, don't swim against the stream. Don't swim against the current. You're not salmon swimming upstream that can get gobbled up by bears. We go with the current, okay? I've tried so many times to fight short positions or to fight momentum because I thought I was correct. Oh, this is overvalued. I know it's going down or something like that. It's not true. The market has a mind of its own, and we follow along, and then we use our indicators to get out before it goes back down. Okay? That's what we do. Next question. Good question, though. Good thought. I can, too, talk about crypto. Sure, let's give it a shot, man. Crypto, Bitcoin had good support at 29,000. It broke back to 30. It's probably at like 33 right now. If I was going to guess, I'd say it's at 33,300. Why? Because I like threes. So let's look where Bitcoin is. And I like Ethereum too. And I like a lot of cryptos. All right, it's at 32.8 and Ethereum's at 19.25. Remember, I bought some over the weekend at 19.06. So I'm still positive, but I was negative. Now, the point is, what kind of cryptos or trades do I like? With Bitcoin rebounding. Now, look at MSTR, right? That's like the Fort Knox of Bitcoin, okay? All they do is buy and hold Bitcoin. So MicroStrategy, MSTR. The point is, when you look at demand, okay, look at the 1 month chart, you'll see volume and demand has picked up 4 out of the last 5 days, which means institutions are parking a hell of a lot of money into Bitcoin stocks. All right, you can see the same with Mara and Riot, and they've been doing it for a while. Me personally, I like the crypto exchanges. So when Coinbase went to 212 this morning, I bought some, okay? Pre-market. When EBON went to 292, I finally jumped back on the bandwagon at 299, only with options in the money, the $2.50 options. That way, if it spikes back to $4 or $4.50, I'll get $2 per contract, and my average cost is like 72 cents. It was 94. I bought more contracts at 64 and 65 cents. My average cost, I believe, is 72.77 now. All right, so yeah, I like crypto. Crypto's, everything's tested. There are certain countries, India, I think Turkey is banning it. You have China that's putting the ban, and then they're punishing and locking up people that break the ban. Then there's the U.S. that say they want to tax crypto. But again, when you look at Bitcoin, 18.5 million Bitcoin, 82% of Bitcoin has already been farmed. All right, so it's already been printed. If it was money, it would be printed. That's already been circulating, okay? So why would the value go from 40 or even 64,000 sub 30? Why would it lose half its value? That would be like gold dropping from 1,900 to 950. It does not make sense to me. Crypto is here to stay. So if you have time, you should be acquiring Bitcoin. Bitcoin, Ethereum. Just keep putting $10, $15, anything like that. It's a good move. You keep it for safekeeping. All right, next question. So yeah, I like EBON. I like Coinbase. What are my thoughts on LI? That's Lee, and that's the auto, the car, and I guess NIO went down. So I'm assuming Lee probably went down today as well. And there was a huge outflow. Okay, so Lee, the good news is it wasn't heavy outflow. I'm sure NIO looks a lot worse. But you have to understand, LI in the last month, okay? In the last month, it is up 41%. Look at the 1 month chart for LI. It's up 40%. I mean, it's a little frothy is my point. If people thought this was a $14 or $15 stock and it's or $16 stock and it's 28 now, it's telling you it's pretty frothy right now. So I'd be careful of that one. Again, if there's demand, and it'll go up just like NIO. Now I said NIO was going to 55. I didn't mean it was going to 55 in 2 weeks. It was $30. It went to 47. There's got to be some consolidation, meaning there has to be some profit taking. Institutions and large investors are the ones that move the stock. It's not us retail investors that buy a couple hundred or a couple thousand shares. They're buying tens of thousands, hundreds of thousands of shares. That moves the price. So when they're taking profit, even if you think the stock should go up more, it's going to consolidate. Okay. Also, Jumia, earlier you got Jumia at its lows. That's great. I would have rather you got in Plug. All right. Plug was up like 1%, 2% pre-market, right? And then what happened? They had earnings. I guess they didn't beat or they didn't miss and they gave good guidance or whatever. And we were watching it and then it was 3-4%. I alerted we were seeing some volume and then boom, it spiked 7%, 9, 10, 13%. I thought 13 was a little frothy. Not going to lie about you. All right, next question. So I'd be careful with Lee. All right, we spoke about this one. It just hit the bottom. I'm not sure it hit the bottom. I'm going to look it up. AHT, I spoke about it that I might have interest at like 615, but I didn't get in because it went lower. And then I said it could even go lower. And I think it breached like $5 to like 480 something. Let's see what it's at now. It probably rebounded a little. Ashford Hospitality, it was selling today. No, it didn't really rebound. It's off 41 cents. The chart looks terrible. It looks like a mountain, meaning it went up and now it's going down. There were some hiccups on the way down, but anytime it looks like a mountain like that, no. Anytime it looks like a cup and handle where it could turn up, yes, that's more attractive. So when you learn these terms, the W, the U, the V shape recovery, this one just looks like a mountain. I'll make it up. A mountain. You go up, you go down, all right? It's right in the other. I don't like that one. We spoke about it. Now, not every stock I speak about is going to be great. I mentioned Wish. We didn't go on Wish. It went up 20% the next day. All right, I saw demand. I saw volume. I just didn't know it was a meme stock. When it's a meme stock, I don't get involved. Risk versus reward doesn't make sense. Next question, man. But I am going to take Carlos to Target later. Maybe we'll get some croissants. All right, stock questions. I'm on SC. He just makes him laugh. I can see him in the background. So I joke around with Carlos just to make him laugh because that makes me happy. SCR. Now, if anybody doesn't know Carlos, he's the person that handles my operations. He helps me with the videos. He does all my back office. He does everything that we need, social media, because the only thing I know how to do is talk, be transparent, and tell the truth. That's it. All right, SCR. Canada just legalized sports betting. Do I like the stock? All right, so I will tell you that this stock in the last month is up 70%. 70% in 1 month. Okay? That right there, that would tell me I'm a little troubled and there's more risk versus reward. Now, obviously, it had huge demand today. 2.8 million shares. It probably does less than a million every day. It does 500,000 every day. It did 2.8 million today. So there was huge demand pushing it higher. Canada's legalized sports betting. You have to know if they're having any competition. If they don't have competition, then yes, it's probably a great play. But again, it was up 9% today. I like to buy things on sale. Next question. So you guys know I like sales. It's hard for me to chase. Okay, is it a good time to buy NEO short-term calls? Okay, I was looking for NEO to bounce back, and it didn't. I'm in Blink right now. In all transparency, I would rather be in Blink right now, BLNK. I'm 8 for 8 against Blink. I called the bottom. I think I did at least. I could see it popping another $2, so that's where I am. But let me look at NEO. So NEO's had 3 straight days of above average volume, and it's all been outflow. Now, keep in mind, I mentioned it before. NEO went from $30 to $47. It went up, over 50% in a month, in a couple of weeks. So there's going to be consolidation. So here's your play on NEO. If you like NEO, you must go out to at least July 16th. I don't want you taking Friday calls on NEO, hoping for a quick bounce. Risk versus reward, and that's risky. If you go out to July 16th, you're giving yourself more time. My options are September call options, and I'm crushing it because I entered in when NEO was like $33, and I said NEO will be 55, and when it's 55, I will return 400%. So I get to zoom out like this. I don't have to look at NEO every day. I just have to be right that NEO is going to be $55 by September. What else did I say? I said Carnival will be $55 by October. I have Carnival options. And then I said Delta, where I have Delta options, will be 65 by September. No, 62 by September, I said. Okay, all 3 good guesses. But I don't have to worry about Delta going from 40 to 46 to 45 because my end goal is 62 by September. Same with Carnival going from 31 back to 28. I don't have to worry because I know Carnival will be $55 by September. Screenshot it. I said the same thing with the UVXY going down. I said screenshot it. I was right. I said there was demand for AI. Screenshot it. I was right. So let's look at NEO. I would not buy short-term options. It is a good time if you think NEO is going to recover like I do. Then yes, 3 heavy outflow volume days. I would be looking to get in around 2% lower. I'd be looking to get in this stock when it was 43.60. Then I would buy my options. So if you're going to buy options on NEO tomorrow, you're going to assume a 2% drop or a sale on your options. So whatever option you're looking at, say it's $400 right now for one contract. I want you to put in a bid at either 300 or 310 or 320, assume a 20 to 25% discount tomorrow. That way, if NEO opens up like this and drops, boom, your contract gets executed, you bought it, then it bounces back up. Guess what? Instead of chasing and being down or up 5%, you're already up 15%. You're already up 12%. It gives you more cushion so that when they do have a sell-off at lunchtime or whatever the sell-off is, say there's a morning dip, instead of being down 25%, you're like, oh, I'm down 1% because your entry was so strong. All right, next question. It's all about entry point. All right. What are my thoughts on Torch? Oh, God. Why can't you guys take profit? You pick meme stocks. I fucked it up again. Oh, excuse me. I screwed up my language again. All right, you guys pick these stocks that are bullshit. GameStop, AMC, Torchlight, Castor Marine, Sundial, right? With Smoke Some Pot, Sundial. No, they're all piece of crap stocks. I get that you're probably 22 years old or 24. I'm not making fun of your age. I get that you were invited into the market because someone was talking about AMC going to 1,000. The point is, if you want to ride up Torch and you got in Torch at $4.98 or $5 or $5.50 or $6 and you rode it to $10, have a strategy. You don't just ride the elevator up and now you're riding it back down. What is Torch? $7 now? $8? I don't know where it is. Let's look where it is so I can make fun of. I would never make fun of you, actually. So let's see where Torch is, though. RCH. Notice it is not on my watch list. Okay, heavy outflow today, $7. It was as high as $10 today. What is wrong with taking profit? You have options. Your options were worth at least probably $3 today. You're in there at $1.50. You could make 100%. So instead of making 100%, now your options, let's see where it closed at because you have $7.50, $1.35. So now you're losing 10%. So what was the move today? Claiming 100% profit or being down 10%. Or here's a crazy suggestion, right? Here's what we do on my platform. We claim the 100% profit, and when it goes down at the end of the day and you'd be down 10%, you could have bought back the same options for $1.35. You sell for $3, you buy for $1.35. Oh, I don't have any day trades. My money wouldn't be available. It has to settle. Okay, your money has to settle. Great. You sell it at $3. You make 100%. Your money's on the side. Tomorrow morning when it settles, you buy the option for $150 again. It's $135 right now. The point is you're increasing your portfolio 100%. If you don't do that, you're riding the elevator up. It opens. You don't get off. And it just fell. Okay? Simple as that. I say it every day. Don't be an elevator rider. Don't be a watcher. I have somebody that I'm giving a private lesson to later. I know what her lesson is going to be about because she loves to watch and tweet me about how her position's up 100%. And then when I look at her position, it's down 10%. The point is we don't watch. We plan ahead. As soon as you buy an option or as soon as you average down on an option, watch episode 37, Ask Matt. As soon as you average down an option, you take your average price or the price that you paid for. Let's just say it's $2 and you want to make 50%. $2 times 1.5, 0.5 for 50%. If you want to make 90%, $2 times 1.9 for 90%. Do you understand? We figure out what price we'd be happy selling it, and then we sell it when it hits. I want you to be not emotional. I want you to trade like a computer. You type in the entry, you go out for a run, you go to the gym, you go to lunch, you pick up your kids at school or camp, you go for a swim. Who cares? The great thing is your phone goes, beep, beep. You look at your phone, it says your position sold. Now, the only thing you know about that is you were getting 50% profit. So you write it on your spreadsheet. I tell all of my platform members, you better damn have a spreadsheet because that's data we're compiling. You've got your stock or option, whatever the symbol is, the strike price, call or put, how many contracts, what you paid, your percentage gain. You need a spreadsheet. You need this data so that when it gets to the day, 2 weeks from now, you're like, what should I ask for when I sell my option? And then you look at your spreadsheet and you say, Matt usually makes 80%, 90%, 100%, 100%, 90%, 80%. Okay, let me go for 90%. So I take what I paid, $3, and I'm like, $3 times 1.9. And then I know my exit strategy is $5.70. So I do not have to look. I did that with AI today. I did that with Square today. I did that with FCX today. Do you see a pattern? I do this every day. This is what I want to teach you, and I'll calm it down, all right? I want to teach you it's math. It's a calculator. It's not emotion. It's not staring at your phone going, come on, go up, go up. I mean, some of these comments on the message board are like, come on, boys, let's push it to 34. Who the hell are these people talking to? They're not talking to me. I can't push the stock to 34. I don't have hundreds of millions of dollars or tens of millions of dollars to push the stock. The point is, you must see demand. You must see volume. Thank you for getting sidetracked on Torch. Point is, take your profit. Next question. See? Ebon, 820 calls. Okay, Jimmy, here you go, man. I gave an alert. And here's the great thing about Ebon. I gave an alert the other day. I paid $1.24 for the $2.50 July 16 calls. $1.24. Then I went down to $1.18. Then I bought more at 93 cents. And then I bought more today at 64 and 65 cents or dollars each. So point is, my average, which I started at $1.24, is down to 72 cents or $72 per contract. So yes, I think Ebon's going past 4. And I think your calls, again, you went out an extra month. Congratulations. Now, what else is going out good for an extra month? If you're looking at TRIT, all right, a lot of you have been in TRIT. I would go out an extra month. July, I'd go out to August. If that's going to move, it's going to move by then. If not, it's a lost cause. Next question or comment. With the UVXY so low, would I ever recommend calls? No. In fact, one member today was saying, I'm taking baby steps trying to learn. I'm going to buy 5 contracts. So he's going to spend $650 on calls. So I said to him, dude, what are you doing? I like the opposite position. All this does is go down. So yeah, it's going to go down. That's why I did a reverse split. So will it go down? Yeah, by the end of the week, it'll probably be sub 29, probably sub 28. This shit is going to just go down. I would never recommend calls on that. Next question. When you recommend calls on the UVXY, you're basically hoping the market throws up on itself. So if you have enough calls, if you have other positions and you're right about your UVXY calls, you're like, UVXY calls, yes, I just made 10,000. Guess what? Your other positions, you just lost 20. So you're basically rooting against yourself. I can't do that kind of stuff. So I'm usually bullish. I usually like to call the bottoms with my stocks or options. And when I'm doing UVXY or SQQQ or SDOW, those are all puts. I look for the ceiling, okay? Entry makes a huge difference. Yes, so just for everybody, okay? If I can teach you how to get 8 or 10% better on your entry and 8 or 10% better on your exit, and the private people, the lifetimers, you know about my 2 secret columns, okay? And if you watch episode 42, I talk about one of those secret columns. So if you're confused, just watch episode 42. Point is, secret columns, they give you and they tell you data on how to get the better entry. So you save an extra 8%. On the way out, you're saving an extra 18% or you're getting max value. So if you can make an extra 23% on your trade and say you're trading 5 contracts, right? That's going to be like an extra $300. Now you're going to do it 5 times a week. That's an extra $1,000 to $1,500 a week. Now we have 26 weeks left in the year. That's an extra $30,000. So if you're trading an account with 15,000 in it, okay, 15,000, that's it, and you're trading options, I'm going to help you get from 15 to 30 without being right on stocks or options. Just by trading smarter, getting that nibble and that nibble. I spoke about nibbles a lot. Next question. Thank you, Sammy. All right. What are my thoughts on Fucel? Fucel, FFCEL. I remember that stock when it was $2, and it was $2 within the past year. So I don't know the true valuation there. All right. I know it was $2, and I thought it went up to like 20. Let me see. Yes, it did. It went from $2 all the way to $27.60. Okay. And then it dropped back down. Then it went back up. But basically, it leveled out probably under $8. It's at $9.35 right now. Now, I'm just gauging demand and volume. And based on demand and volume, it's 50-50. It's a highly volatile stock. So Fucel, FCEL. If the markets are strong, you'll keep seeing 5% gains every day. However, if the market turns, rather than a normal stock going down 1 or 2 or 2.5%, like Carnival or Delta, Fucel, it will overreact. So if we have a bad day, the same way Tiger goes up like 10% and then TIGR will go down like 18% one day, FCEL, it has the potential, if we have a terrible day, for not only to go down like 3%, but it'll go down like 15 or 13%. So be very cautious, especially when you're in options. If you get in too late and you're buying a spike or you're buying and you're chasing a little, if it falls, you're going to get severely punished. All right. So that's the thing. Option rules. I speak about them on my platform. So I already scolded you guys for getting too heavily leveraged into the UVXY. You must follow my option rules. You must average down the correct way. You must not overextend yourself. We don't want to blow up accounts. Small piles become big piles. It takes time. Nothing's instantaneous. Okay. All right. Next question, please. Woo, it's humid today. All right, Ryan. Oh, by the way, there's something on the side. If you want to make a comment and have a pretty little color, blue, yellow, pink, green, you throw out some money like that, I get to your questions sooner. There are just so many damn questions, so I try and get to them. All right, just wanted to say I'm a member, not because you're always right, but because I'm always real. All right, that's good. Real and right. I would like to be both. All right, it upsets me if I'm not correct. Other day, somebody asked about GStat. US says, shit, get out, take every penny. Now, let me see. I think that went up, actually, so I think I was wrong on that one. I was just looking at the chart. But isn't this a mem stock too? Did I say that correct? Oh, it had 2 straight days, right? So, yeah, it had the Twin Tower days. So I think it was actually yesterday, and I said, yeah, I would definitely secure profits, but it went up another 23% today. So, yeah, transparent, call it wrong. I'm assuming you're using $10 from the money that you made in this stock. But $1.88 finished near the high, 158 million. I mean, I would be scared shitless if I was in this stock. 2 straight days like that, sell off tomorrow. I might actually look at that to see if I'm correct to sell off tomorrow. I'll put it on my list. All right, next question, please. So that was GSAT. I think it's going down tomorrow. All right, thoughts on XL. I could probably tell you without looking right now, but I will look at the chart. I will tell you, XL has so many haters. It has so many haters. Jim Cramer hated on it, pushed it down from 18 to 9. He said, oh, shorts win, shorts win. He's an asshole. Okay, but it has so many haters and so many backholders that every time it spikes, and it spikes in the morning, whenever it spikes in the morning, it trickles down. So today or lately, I've been seeing some action that actually shows me that it might be time to break out. And I said XL, I was looking for it to go to 9 to 10, but it really disappointed me today. Oh, it closed at 8 today. Volume was so damn light. I mean, people just don't like this stock. They would rather be in NEO, CCIV. They would rather be in the real EV stocks, not like the transition. Like XL basically takes your car or truck or fleet and they make it into an electric vehicle. All right. I guess that's not where the demand is. I thought it was, and there was a lot of demand going up until June 8th when it peaked at $9. And then they've just been selling and demand's been really light. So I would be wary of that. However, it could spike. Like Sorrentino Therapeutics today spiked off some good demand. Remember, we've been talking about that. XL, Romeo fall in the same category. All right, next question, please. Tiger, why do you have $30 calls? Why do you have $30 calls? I mean, that's the first question I have. You put the question down, and I'm thinking, why do you have $30 calls? When I gave an alert, my alert was at $22.50. Then I spoke to Romeo today, and he was asking about his options, and he's in at $25 strike. Why are you at $30? I just don't get it. I mean, especially when the stock was beaten up like 18% the other day, went to $22, and you should buy $22.50, $25. So what would I do? I would have sold those today when it spiked. When it spiked, I'll give you an example, okay? I'll tell you exactly what I would do. Let me just get back to it. All right, where is that? Uptech, here we go. All right, options, here we go. You're of the $30 ones. They are at $90 to $95. So your average down to 92. You should sell those. You could have broke even today. And then when Tiger dips, so here's what you're doing. The next time Tiger spikes, which could be tomorrow, if tech is strong, I expect Tiger to go up like 8%, 7%, 8%. You plan for 7 or 8% move, okay? Your delta is 0.27. So if Tiger moves 8%, which would be $2, and your delta's 0.27, your option price will move 54 cents. So if that happens, I would get out at $1.45. If Tiger spikes, I would take your option position. I would sell it at $1.45. I'd put in the ask ahead of time. And then when it dips, I would buy the 22.50s or the 25s. All right. So again, you're looking for a spike. You're looking to get out and get in cheaper for a lower strike. Next question. Always in or at the money. I have specific rules on my website. So when I say you guys are breaking the rules and other people are like, what the hell's the rules? The rules are we don't buy options before 10:30 a.m. unless we're getting them on sale. We don't sell options before 10:30 a.m. unless we're getting a huge price. Why? Because the spreads between the bid and the ask are so wide before 10:30. At 10:30, they narrow to a penny, to a nickel, to a dime. They're the smallest it can be. Hey, Matt, what do you think of XPEV? Is it going to dip more? I can tell you it's going to, when you have a watch list, put XPEV next to LI, next to NEO, because they all should move together. So, yeah, I'm gonna look at this one for you. Don't worry about it. Here we go. XPEV, XPeng. All right. Well, I mean, this is the one we looked at the other day. The chart looked great, just like NEO. But it's had 2 straight days of going down. NEO's had 3 straight days of outflow going down. So yeah, in the last month, The stock is up 40%, even with the 2 bad days. So it must have been up like 60% or something like that because it went down 8% today. So yeah, do I think it could dip more? Yes, there could be profit taking. Put it with NEO, put it with LI. If those stocks start to dip tomorrow, then yes, I would get out. Now remember, same lesson I gave earlier. Look at the 1-month chart. Tomorrow at 10 a.m., if it's green by the slightest bit, you know there's inflow. That's a good thing for your stock. If it's red and your stock is basically even, you know that people are selling. It's probably going to push the stock down, which will push your options down. So it's okay to sell and plan ahead. I like to plan pre-market because when the market generally opens, it does this. It's very wild and volatile. So when it does this, somebody hopefully is buying my ask. When it does this, I am hopefully buying someone's cheap options with my bid. All right? I'm playing both ends. Bid down here, ask up here. If one of them gets triggered, I'm half happy. If I get both positions triggered, I get crazy happy. Next question, please. So yeah, watch NEO. All right, you're down almost 45% on EM. You're holding longer, stepping out. Okay, Eric, thank you for bringing this to my attention. And Eric, it's perfect for you to do this, okay? Watch episode 14, Ask Matt, okay? It's called Stepping Out of Shit, meaning you're in a shitty position. And I tell you, if your stock is down 30, 40, 50, 60%, you sell it. So yeah, even though I like EBON, I'm telling you, you sell EBON, you get $3.08. Then you buy the January call, the leap year call, use all your money. I don't know how much you have. Let's say you have 1,000 shares left and you get $3,000. Use that $3,000. You buy January EBON, $2.50 calls. I don't care what you pay, $1, $1.50. When EBON hits $6, let's say, by January, I actually think it's going to be double digits. But when it hits $6, rather than being up $100 or something like that, you're like, oh, I'm up $100. No, you're going to double your money. You're going to be up like $2,000. You're going to make back your loss and then make some money. So please, episode 14, I'm in a shitty stock position. I step out and into something good. I give specific examples. I might even use EBON. All right, next question, please. Hey, Justin, should we sell our out-of-the-money calls for STX and use that money to buy in-the-money calls? No, I don't think so. I don't remember, Jordan. STX calls, they expire in July. I expect XTX, which I already admitted that I think I'm calling the bottom, okay? There was inflow this morning, and it turned to outflow. So STX has been beat up for a number of days, and it kind of held its own today. So, yes, I expect that to quickly bounce, and when it bounces, I expect good movement to the upside. All right, there is a chip shortage. I've been following STX since it was $64 up to $104, and now it was on its way back down. And I said, boom, that's the time to call the bottom. So when I call the bottom, I'm not always perfect. I might have to average down once. I might have to average down twice. All right, you average down, but you're wondering if it makes sense to switch. No. The reason is STX is what, $85. If it moves 2%, you're 87 and change. And we have till July, whatever. So if it moves 5%, boom, we're profitable. We have the perfect options. Now, if I was entering a new position right now, say I had no STX, I would buy a lower priced option. I would buy the $85 calls. That's honest. I mean, that's what I did do today for my own account. I bought the 85 calls, but for the alert, it was a couple of days ago, 2 days ago, it was the 87.50s, and I'm still secure with it. Next question, please. So hot out. All right. There's a question. Thoughts on Tesla for the upcoming week? So let me look at Tesla, and thank you. There it is. Thoughts on Tesla. All right. So Tesla is one of the most heavily shorted stocks, I am told. Now, I've been talking about Tesla for a while now, and because there's always heavy demand, heavy volume. It's 3 days on, 1 day off. So that's a good sign. The chart looks decent, the 1 month chart. The 5-day chart looks decent because you're up 4% on the week. Now, the problem with Tesla is it moves quick. All right. So if you're anticipating and you say Tesla's going to move up 4% next week, okay, which would be on average, you're going to say it's going to go to like 650. The point is it's at 623 and you're paying a lot for the IV. So you don't want to buy Tesla options. You basically want to wait for the 1 day where it drops to 602. When it's dropping and at $602, that is when you buy the 605s or the 600 calls. You pay a little more money, you're in the money, and that's when you would look for the bounce back to 625 or even 650. If it's at 623 and it dips $6 to 617, no, stay the hell away. You need a major sale. You need 4% off. You need a strong market day, and someone decided to sell and get out of Tesla. That's the only time I get in Tesla. And let me just say, I am 10 victories and 2 losses against Tesla. 10 victories, 2 losses. That's it. So I own Tesla. If I say something about Tesla, and it's still scary, every time I get in, it's still, I'm like, oh, geez, I hope I'm right. Tesla is very dangerous. Next question, please. Hey, Matt, what's happening with Delta and Carnival? They've been going down for a month now. Yeah, I mean, that's why my options for Carnival expire in October. That's why my Delta options expire in September. I told you guys, and I told you this probably 8 or 10 days ago, and you could probably find it on YouTube. I said the Dow is getting beat up. And all but 2 days ago, so up until Friday, every day for 2 straight weeks, the Dow was beat up. 12 out of 13 trading days, the Dow was beat up. So what are you expecting? Of course, Delta's going to go down. Carnival's going to go down. Who wants to own cruise ships and Delta right now? Now, I look long-term. So when Carnival goes down $2 today, I bought another 10 contracts that expire in October. When Delta goes down, if it didn't go down today, or not enough for me to actually take some action. But if Delta goes down 2 or 3%, that's what I do. I just keep adding to my position in September, October. That way, I don't have to zoom in. If you're playing Carnival or Delta for next week, then you're absolutely insane. Unless you know that something is going to be a catalyst. And the catalyst for Carnival is they have earnings out. How are they going to beat earnings? They didn't even sell anywhere. So their earnings are probably disappointing. All right, next question or comment, please. All right, Giovanni, man, you're just giving me money. Make it rain, Giovanni. Make it rain, buddy. All right, thank you, dude. Good info. I love that shit, man. I'm so glad to be appreciated. I even tell this to my members of my family and my platform. It feels good to be appreciated because I put so much effort into this, and it's hard to be correct. And I feel if I'm incorrect, then I'm going to screw you guys. And it doesn't matter if it's one person, I would feel horrible. Or if it's 100 people, I'd feel horrible. That's why I err on the side of caution. I always tell you it's risk versus reward. And I analyze every trade where the risk is maybe like 20 or 30%, and the reward can be like 80 or 90%. If the reward is 3 to 1 or 2 to 1, it's a good damn trade. Remember, my trades on the spreadsheet, my alerts are over 81% now. So we're on fire. All right, next question. Thank you, Giovanni. That's crazy nice of you, man. Hey, and Carlos writes, thanks, Sean, for lunch. So Sean, another platform member, I said the UVXY was going down to $30. And Sean said, I owe Carlos lunch. Where do you want to eat, Carlos? He's sending him a gift card. The point is, Sean did not have a position in UVXY. He's just happy for the family. So the point is, if you miss a family environment, if you're confused in trading, please, this is the content we deliver. Not only content, but there's a family atmosphere. There's a helpfulness. It's not, hey, you clown, or I'm making fun of you. It's like, hey, keep up your head. You're going to do better. Hey, you can secure profit. Remember to plan ahead. We inform and we remind each other what the rules are. The rules work. All right, Russ, thank you for the $25. Thank you for keeping. Yeah, so Russ had a big position today. He had, I told you should have held. You should have held longer. I made the mistake of selling some of my UVXY yesterday at $3.15. They were as high as $3.85 today. Do the math. 25%. I missed out on 25%. All right. Giovanni's asking one more time. Neo. So the same thing as I just answered for Lee and XPENG, XPing, right? Here's what you need to do. Group those 3 together. And you need to look at the charts at 10 a.m. tomorrow morning. And you see if each of those have demand, then it should be a good day for that industry. If each of those is red and you see more outflow for each of those, Neo, XPeng, and Lee, then you know they're all going to run together, and I would get out for tomorrow. And when it drops down a little more, you could re-enter your position at a lower price. So if you get out of a position at $2 and then you sell it $2 and then you buy back in at $1.50, guess what? You just saved 25%. So if you had 10 contracts, right, you have 13 contracts for the same amount of money. If you have 20 contracts, now you have 25. You just increased your position without doing anything. You're in the same position. You just have more contracts. That's what you do. If you know something's going down, you can see there's more outflow. Get out and then just re-enter it 60 cents lower. All right, have a good night, everybody. Thank you.